Welcome back. I've got Dana Samuelson online. Dana, how are you?
Good, Michael. Thank you for having me.
Really looking forward to this conversation and thank you for spending some time with us today. So, why don't you share a little bit about you and your organization, then we'll jump into this very important conversation.
Well, I am a 45-year precious metals market veteran. Got my first job in the business working in a vault because I could be trusted right out of college in 1980. I got a lucky break in 1983 when Jim Blanchard offered me a job. He is the man most responsible for the private relegalization of gold ownership. In 1974, gold was illegal to own in the United States from 1933 to 1974. Jim recognized when Richard Nixon took us off the gold standard, where every dollar that we printed was backed by an ounce of gold in Fort Knox. When Richard Nixon decoupled that, Jim understood that gold would gain value against the dollar, or the dollar would lose value against gold. And he was correct. So I got to work for Jim for 10 years, and I became his senior buyer. I got to spend millions of dollars of his money with the industry every year. And I made a lot of contacts during that period of time, which allowed me to open up my own company, American Gold Exchange, in 1998. We're in our 27th year. We've done over $2 billion in business flawlessly. And I'm an industry leader. I'm a past president of the leading organization of rare coin dealers, the Professional Numismatist Guild. And I've also been an expert witness in predatory precious metals pricing cases alleged with the SEC and the CFTC. So I'm trying to give back now that I'm, getting later in my career. But I'm just a humble nerd, basically, who's been in the gold market for 45 years.
And you've seen a ton of it. And, a lot of people, and I knew the history of gold, especially when it was illegal. It's one of those things you say that to, younger generations and they go, what? And it's like, it was illegal to own? It's like, yeah. And, just like, women couldn't have credit cards until, in their own name until the early 70s. And people still go, what? It's in, people, research that. There's some things to learn about that. It's good for you to study history so we're not doomed to repeat it. But when it comes to gold and especially and we talked about this briefly in the pre-show, it's like, in the recent months, the value and the price of gold has gone up. The return on investment is things that people dream about, and it's been something that people have been saying, for quite a while now. It's like gold's on the edge to, make a big surge on that, and that's, all tied to a lot of things right now. And at the time of this recording, the stock market in the U.S. is has had a bit of a bumpy ride over the last few weeks and months, and there's all kinds of economic challenges on there. So as we all know, and they tell us when we watch the news, if there's a storm coming and it could be a really volatile storm, take cover. And gold, and again, before I continue, this is not investment advice. This is an investment conversation. Do your own due diligence and research and all of that. But um, gold is one of those places that, is, in my opinion, again, my opinion, is a very safe place to, park some of your investments. So love to hear your thoughts on that, and feel free to share, your insights on what we're seeing in the economic markets and whatnot, and why you think gold is doing what it's doing today.
Well, let's take a step back and look at a couple of basic fundamentals. First of all, we had $7 trillion of debt in the United States in 2004. By 2014, we had $17 trillion in debt. We've more than doubled. And then between 2014 and 24, we've doubled our debt again now to over $36 trillion in debt. And this is one of the fundamental drivers of the gold price is just global debt explosion. Politicians can print money like crazy, and they've been doing it. So it's really not that the gold price has been going up so much. It's just that paper currency has been buying less and less of value. And we've gone through an inflationary period, which we hadn't seen one like it since the late 70s. The last time gold had a huge bull market. It's not a coincidence. Uh, Also, since Russia invaded the Ukraine and we sanctioned Russia, we seized their assets and weaponized the dollar. We've seen central banks step in and buy gold at record rates over the last 3 years. This is helping to drive the price higher. Why? Because if you have gold in a vault, it can't be seized or sanctioned. And just recently, we had a very unusual occurrence where, following Liberation Day, when President Trump announced much more drastic reciprocal tariffs than most expected, we saw not only the dollar sell off, but we saw U.S. Treasuries sell off sharply. And usually they're safe haven in a financial crisis, where if we have an economic crisis, the U.S. is the biggest and the best economy in the world. It's the safest. Money from around the world comes into the U.S. They buy our dollar, they buy our treasuries, they push the yield down, they buy into our stock market. Well, following Liberation Day, we saw the opposite of that. We saw the stock market get hit hard. We saw foreigners flee our market. They sold our treasuries and they sold our currency down. And gold stepped in front of US treasuries and the US dollar as the first choice of safe haven asset, which has never happened in my recollection to the degree that it just happened recently. And it drove gold all the way up to $3,500 an ounce. Today, as we tape this, we're channeling between about 32.50 and 33.50. But the prospects for the US economy are looking kind of weak right now. And if that happens and we go into a weaker period, what will the Fed do? Well, they'll cut rates. That's good for gold. If we're in a weaker economy, the dollar could get weaker. That's also good for gold. So while we've seen, an over 20% gain just this year so far, and an average gain of 8% annually for the last 20 years, this market still could have a long way to go higher.
And that's the thing. And, I do my best to kind of avoid, politics on the show. And I know that one of the, it's just, I tell people, both sides are wrong there. I just, both of you. Yeah. But I think, one of the comments and, some of the things that are saying is, and they're doing this, and it's from my observation, again, just my observation, that the administration is framing, these exercises as, okay, this will make our economy stronger, more American-made products, and and inherently not necessarily problematic. However, cost of things and all of that, it's not a light switch where it's like, okay, boom, this, and then all of a sudden it's there, because the U.S., for decades has desecrated its industrial thing. And I'm not saying that we need to refocus on industrial. I think technology and biotech, again, in my opinion, I think are better investments than the old tool and die type of things. And again, I'm not knocking those roles. My family generations worked in assembly lines and manufacturing and all of that. Critically important. Everything that we're touching and using right now was manufactured somehow. So we need to have the capability to do that. But we also have to factor in the cost, the ability. And this is the second time today. I was on a show earlier. It's like most of us probably forgot economics class because we took it in college and we took it on a Saturday morning and we weren't awake for it. But go study economics, supply chain, how things work. It'll give you some better insights as to what's going on, and these things impact the markets. The markets recognize it. There's, okay, consumer sentiment. Okay, if that drops, then all of a sudden the stock market goes, ooh, that's not good. And, the stocks and the market reacts. And when that happens, people go, they start to panic. And like you said, when Liberation Day happened, that mass pullout, which some people were like, oh, we expected that. But I think a lot of other people are like, we didn't expect it to that magnitude. Again, bodes well for gold, because and in other precious metals, because people go, all right, like you said early on, they can't put a tariff on that. At least I hope they don't try to, or something else. It's like or it doesn't matter if it's the US or another country. It's like, okay, this is safe. There won't be sanctioned, there won't be restricted. It's its own currency. And I think, not that I want to dive into like digital currencies and things like that, because that's a completely different ball game, and all kinds of things still getting sorted out in that arena. But I think there's some similarities where people want some type of investment thing where they know that it will be, quite frankly, there for them. And you know, this is not news to you, but it's something I share on my show, or yeah, I share this quite a bit. Fortune 500. So 52% of the Fortune 500 companies from the year 2000 are either gone or have been acquired. Um, think about that. That's half of the Fortune
Right.
500 gone, and publicly traded. That means the money that people heavily invested in those companies also gone. So people lose money. I don't usually run into people that lose a bunch of money and have them be happy about it. Where again, even gold is not one of those things that has been what you would classify as volatile. Has it been down? Yes. Has it go up? Yes. But it's not these knee-jerk reaction kind of things. Um, but in the instance of what we've seen this year with the 20% so far increase, that's not knee-jerk. That is, okay, I need to protect my assets, my investments, my own well-being. Where can I put these funds? Besides under the mattress, which you don't want to do that because someone will find it and then it's gone. So usually it's a kid, but anyway, not that I know anything about that, but no, yeah, it's just again, I think that's where gold is one of those arenas that I think has stood the test of time, and I think it's really important that people, if they're not in it and not doing it, do your due diligence and research. So, love your thoughts on that.
Well, the one thing that gold really has going for it that fits what you're describing is it has no counterparty risk. It's an asset unto itself that has, 3,000 years plus of store of wealth, store of value for the human condition, right? King Tut's burial mask had 22 pounds of pure gold in it. And that's why it's considered safe haven today, because it doesn't have counterparty risk. Its value isn't contingent upon a contractual party on the other side of a transaction, like a company producing a profit or a tenant paying rent. So you don't have to pay the mortgage on that property yourself. There's no counterparty risk with gold. And it's a big enough market where, when big money decides to make some changes, it's a big enough market to move into. So where would you might go if you're going to leave the U.S. market? Where are you going to go to emerging markets? Well, not very many of those markets are big enough or safe enough to handle some of the volumes of money that have been moving around lately. Now, what we're going through could just be an episode and not a real trend. We'll see how that shakes out. But it was a pretty severe episode. And I applaud President Trump's efforts to try and rein in our debt bomb, because it is a debt bomb and we are on an unsustainable path. But you can't go through 5 decades of globalization and deglobalize that in 5 weeks and expect a smooth transition. So we're in a bumpy path here, and we're going to have some pain before we get to the gain he's trying to accomplish. Um, the question is, can the U.S. public or the markets stomach the kind of transition that we're going to go through in the short term to get to the gain that I do think we will have the potential to realize? I think he's trying to do the right things. And I agree with you politically. If you take one side or another, you're going to upset about half of your people. Because I'm really dissatisfied and sad that the U.S. is bifurcated the way it is politically these days. But that's the reality of the situation, which is why I try and be as apolitical as possible and just look at the facts. And the facts are we have unsustainable debt. It's got to be managed. And finally, someone's taking the reins. But it's a bit of a pill to swallow to take the medicine in this case.
Yeah, I agree with you. It's unsustainable, and it's one of those political dynamite kind of things where they say, no, you can't raise taxes or you can't do this because they won't vote for you, kind of thing, because people vote with their wallets and their current pain. And agreed, it's a situation where, from an economic standpoint, having the debt load be that much in our lifetimes to grow to that extent just says that we've been spending way too stupidly, quite frankly. And, individuals do this all the time. That's why you see 70% of Americans have uncontrollable debt. In many cases, even with cost and inflations and things like that, there's a good component of that spending that got them into that debt situation. Was stuff that they really didn't need, and it's catching up with them. And quite frankly, that debt load has caught up, and it's it's much like, when people, gain a lot of weight and they want to lose it. Well, you didn't gain that weight overnight. You're not going to lose it overnight, but the the there's going to be some discomfort. And like I love how you presented it. It's like how much are people going to stomach? And the media doesn't do us any favors because they sensationalize things and follow the Chicken Little uh, playbook basically, and saying the sky's falling, this is going to be the worst day in the history of days. And 99.9% of the time, it is not. It's a moment in time. Yes, it's difficult, but you have to control what you can control as an individual, and that means like from investments and things like that. Look at how you invest. If you're in the market, understand that there could be some significant adjustments, and you might be in some really troubling times. And I think about our, and you see it in the news too, because occasionally they'll mention this. I think they need to mention it a lot more than they are. You have a lot of people, the baby boomer generation are you know either deep into retirement, or the younger ones are approaching retirement in very short order. And their investments were up here, even 6 months ago, and all of a sudden they're down, who knows how far down it's going to go. And I feel for those people because it's like, oh my goodness, is that going to delay their retirement, financial stress? And I deal with organizations and individuals that are burning out. And I'm a firm believer that financial stress is the worst stressor there is, because as we all know, I don't think anybody of us enjoys paying bills, but we enjoy the ability to be able to pay bills. And I'm seeing a lot of people struggling with that. And, the markets are what they are. So, in difficult times, you want to look for safe haven. And I don't want to paint this picture like, okay, when things are bad, just get gold. But when things are good, dump it off to the side and go back and buy yourself a bunch of whatever stock. It's like, make it, and again, this is my opinion, not advice, but just my opinion, make it a part of your portfolio. And I think that short term and long term, it's a good place to put some of your investment funds, to protect yourself down the road.
Yeah, I agree. So we don't have really a gold culture in this country like almost every other civilization has, because we've never had war on our shores and we've never seen our currency fail, which is why people go to gold when there's instability or uncertainty. And what gold really is an insurance policy for the rest of your finances. The World Gold Council has done a study going back 25 years that says if you have 6 to 8% of your net assets in gold, you have that counterbalance you want when times are troubling, like they were during the great financial crisis or during COVID. Both of those times, gold performed very well when other things did not. And once you have your insurance policy in place, you don't need to keep adding it like you do with life insurance payments or car insurance or home insurance payments. You have that policy. And if you need to tap it, it's instantly liquid. And often it's one of the only things you can sell when markets seize up, like they did during the great financial crisis. If you wanted liquidity, precious metals gave you that liquidity. Where, bankers, they'll loan to anybody in a good market, including dead people, like we saw in 2007. And when things are really tight, like they were in 2010 and 2011, they wouldn't give a loan to anybody, including Warren Buffett, right? So they wax harden, harden cold, hot and cold rather. So gold is a good complement to other pillars in your portfolio, whether it's stocks or bonds or currencies or commodities. And that's the way we look at it. Also, it's a great way to save money outside of a depreciating fiat currency. And fiat means it's just backed by nothing but the full faith and credit of the government that produces that currency. And who's in control of the finances? Politicians. Politicians like to spend money because it helps them get reelected. And our politicians have certainly been very, very poor at keeping their finances in order over the last 20 years in particular. It's one of the biggest, debt accumulations, we've ever seen. And it's a recipe for problems, as we've discussed already. So gold is a good antidote to that, but you don't want to have too much, but you should have a little.
Yeah, it's important to do that. And yeah, you look at, their body of work over the last couple of decades, to increase the debt, and what do we have to show for it? And that could be a completely other conversation for sure. But Dana, I've loved this conversation. Where can people find out more about you and how to invest, in gold and everything else?
We're physical dealers. We deal in the physical products. Um, we are a national mail order company with our office in Austin, Texas. The company's American Gold Exchange. Our website is amergold.com. And an email address is info, at amergold.com. We're small, but we do a big volume of business. We're consultative in nature. We want to help people with what they're trying to accomplish. Because if we help people, we help ourselves in the long run by getting repeat business and referrals. And we get a lot of that. We're very competitively priced. We stick with the mainstream products that are good for you as an investor. Number one, because they're competitively priced, they're widely traded, but most importantly, easily sellable. You want liquidity when the time comes. So we deal with the most popular products. If they were ice cream, we'd call them vanilla, chocolate, and strawberry, the three most favorite flavors. So if anyone's interested, just give us a holler. You can email or call 800-613-9323, and we'd be happy to answer any questions you have.
Awesome. I'll definitely have that in the show notes. So Dana, loved our conversation. Continue doing the great, amazing work that you're doing.
Thank you, Michael. Same to you, sir.